Another big focus right now is what's happening in the primary market. And sometimes I think there's more action in the primary market than what's happening in the secondary markets or the cash markets. And a topic of discussion right now is valuations of a particular company that wants to listen. I'm not asking you to comment on that company or those valuations if you're not comfortable, but just to give us a sense of this gauge that investors need to look at. It seems like this is a time when a lot of companies who have been waiting on the sidelines want to come out and cash out. Investors and early investors, angel investors want to come in and cash out. What should you look out for? And is this a concern?
For us, as a relatively conservative house, we think this is the biggest concern we have. And everybody, even the best of the brain in this country, are getting carried away. It's not about people are blaming the bankers or the companies. The money managers themselves are participating. Some, like one of the promoter recently said, if somebody is willing to pay, the money manager, the fund managers are willing to pay me 200 or 250 multiple, why will accept it? It's a demand supply situation. So if demand is so skewed in their favor, it makes a lot of sense for them to exit. It is the maturity of people now, because my worry is that lot many young people have come who have not seen these cycles, and they are all very, very excited about it. And this is the way human psyche is all about. When you see M2M game coming and everybody is making money, that sort of some amount of hype is getting built in the market, and that's my biggest worry, because these are A, very expensive, B, when whatever reason sometimes the stock start correcting, there is no exit in these names, absolutely illiquid names. You look at the last 1 year, if I'm not wrong, 60% stocks are trading below the IPO price. So those are the concern which we have. Yes, short term, everybody is very happy because of illiquidity reason. The float is not there. It's easy to pull up these names. Those are the phenomena which is going in the market. And our worry is there. We generally tend to avoid all these names. As a house, we rarely invest in some of these expensive names.
No, so I have a counter to that. The other side of that conversation is that there are some new age companies that you cannot look at in terms of a conventional valuation metric. Their TAM, or the total addressable market, is something that you can't envision right now. And that is what the valuations are talking about. Don't look at it like you would look at an old economy company. That's the argument. What would be the counter?
I will give you a very fair answer. Okay, I will straight away compare how these companies are valued in the US market, which is a very mature market. If US is not willing to pay these companies these sort of absurd valuation, then why should I pay in India? Okay, and look at some of the companies from Korea got listed. They are saying they are not getting that multiple in their own country. It looks like some of these companies will now list in India because India is paying the premium, and hence people will come. There's a joke people talk about, let MNC company make India as a headquarter and subsidiary in Korea or other countries. That's the way people are talking about. So it is a stupidity on a part of our industry that we are giving these absurd valuation, and then we'll blame at later stage, oh, flow was very, very large, we have to deploy this money. So our benchmark is very, US does not give these sort of valuation, and that's a more mature and evolved market. Okay, so I will give a comparison out there rather than just looking Indian valuation in isolation.